Good day, everyone. Thanks for joining us here in the charts. Tune into the Market Beast Edition. Fellow compadres speaking. Today we'll be exploring the Zomedica Corp. Instrument symbol ZOM. Just take a brief look. We've actually covered this before. We're going to revisit the previous video and just let you guys know where I could potentially see the market retrace into as a potential area of interest. Please do not take this as financial advice. So loyal subscribers, welcome back. If you're new here, consider joining us. Definitely join us after we show you this information. We've covered this some time ago. Guys, let's dive right into the charts here, shall we? All right, so today's April the 9th, 2021, and the previous close of Zomedica is going to be $1.24. It closed negative approximately 6% for the day. Okay. All right, so hopefully you guys are doing well. Welcome back. ASMR, interesting analysis. So before we get into this chart, this is the original chart. Well, this is the chart that we're going to be taking a look at. And here is the video that we posted, December the 6th, 2020. Notice the price was like 17 cents. I think on that video, we actually got it wrong. We only had a an 88-cent target. Okay, so as I actually pull up the charts, you'll notice like right in the middle there, if you can see that, has like an owner's range. And there's actually a falling wedge. Yeah, falling wedge is what it calls. It's a very bullish pattern, if you can see that, in the owner's range. And I'm going to go ahead and pull up everything. So yeah, I just wanted to show everyone, like, yeah, if you're not subscribed with us, we'd definitely love for you to join us on this interesting journey, guys. We were, I guess, well ahead of the crowd seeing something like this take place. But again, we got it wrong. We said 88 cents. Here's the chart. That's it. Super simple. Ladies and gentlemen, you're looking at the same chart that has been on the chart here for some time, the falling wedge, and of course the breakout, because some of my fellow compadres, I think they got in at like 17 or 14 cents, like very, very low, and they were just waiting to 10 extra money, and obviously that came to fruition. The 88-cent level is just below the owner's range here. So the area that I'm anticipating the market to go down to, this is not guarantee, guys. Please understand that the market could be up against a vicious bounce next week. Today's Friday, and then of course Monday morning the new candle opens. These are weekly candles. This is not guaranteed, but the only area that I'm able to see as a potential back test of the previous level of interesting support. And the reason that I say that is because, okay, if we kind of zoom out and look at everything again, weekly candles. So I'm always zooming out, guys. I'm never looking at anything else, just looking at the price action. If we just kind of look at it from a practical standpoint, you'll notice that the highest level ever in history, and Zomedica is right here in June 18th, 2018, okay, right over here. And it reached as high as $2.98. Okay, the reason that I'm pointing that out is because the most recent high in the price activity could be identified over here between February, kind of towards the present day, and the highest that it actually reached was $2.91. Now I know it's a few pennies off, so I'm like, dude, it doesn't matter. It's still gonna go to the moon. Maybe you're right, but when the market technically makes a lower high, because I mean you can argue that or not. I mean, this is a high and this is a lower high, right? So when the market makes a lower high, it needs to seek an interesting / substantial area of financial support to propel the price back up to the upside. So the area that I'm able to see in this market as a potential in quotations, area of interesting financial support, whether there's strength there or not, it's in between these green lines right here, okay? Or this green rectangular range down here. And it goes in between 84 cents all the way up to $1.05. It's the same area that we had on the video. Nothing's been changed, guys. Same exact range, okay? So, I mean, we haven't covered Zomedica in some time, guys. When everyone's like all hyped and chasing, we're like, look, we don't want to cover that stuff. All right, because we'd rather focus on the plays that are going to, potentially break out soon, right? And we're not just kind of chasing the shiny star, so to speak. So that's the range, guys. You have it, 84 cents up to $1.05. Please assess like some sort of scale-in method. Don't like when the price gets down to like 97 cents, they're like, oh yeah, man, I'm about to hit that $150,000 on this market. Napoleon told me I'm about to be a millionaire. No, don't say that, okay? I never said that. All I said was the previous level of potential interest. This is the owner's range. Let me just explain how I got the owner's range. So what I do is I just kind of go back in the, let's see here. I think of the monthly candles or something. I'm not sure exactly how I got it, but it may have been like the let's pull up the 3-day candles, guys. Sorry, I'm never ever organized. All right, so let's kind of look back in the day, so to speak, just to kind of look and see. It's a really choppy area. One way or another, the market had an area of activity. I think, yeah, like on the 3 month, that's where I got it from. Okay, perfect. So because I'm always looking at the higher time frames, right? The 3 months is how I actually got this range. So notice how this green candle right here, July the 1st, 2016, this green candle here, and then you notice on this this green candle here, very large wick below the green candle. I never like wicks below green candles, guys. It's a bearish sign, just kind of a note taker, right? Just take that as a note. You see this next 3-month candle, and then notice on this 3-month candle actually broke above that box. So that's how I actually got the owner's range. So that's yeah, that's basically how I always find ranges. I'm looking at the candle's body. So we actually do like a small adjustment or something like that. So the actual range, let me just be very particular. All right, and the actual range is going to be 83 cents. And then, of course, the high is going to be $1.03. So if you guys want to get like super technical with me there, that is the range that it's not even guaranteed to get that low. So please understand. Just have a strategy, please. You know, this is actually a pretty interesting sign here. This 3-day setup. I think it's called like a bullish harami or something like that. Where the 3-day candle right here, this is an active candle, so this isn't like a closed candle. So in other words, essentially this could turn green, it could turn, you know, go lower, right? But everything, it actually opened in the body of this 3-day green candle. That's actually a pretty bullish sign. So if the market actually moves up next week, that wouldn't be a shocker to me, okay? Because again, even though I have this range down here, so what I do is like, let's just say I want to enter this market, and I'm saying, okay, Napoleon says it could get as low as 83 cents. That's 33% to the downside. I always start with like a 10% position. Always. If I got $1,000 to put on this market, just throw $100 at it. And especially on like a down day like this, oh man, beautiful. Oh yeah, I love buying on down days like this. If I can actually pull it over here, like a 6% down on a day. Oh yeah, that is beautiful. Yeah, I would love to, you know, just kind of throw 10% at the market and just kind of, if it goes down, you know, let's just say it's 30% down, right? So if I'm giving you a range, right, of potential support, right, I would enter only 30% of my position. Okay, I don't think I've been this particular. I would enter 30% of my position, 10% on this day, like exactly today was 6% down. And if it goes down another 10%, I'll put another 10% of my position in. And if it goes down, what did I say, 30%? So hang on, let me see if I could, so let's see if I put my 10% there, 30% down. So yeah, so what we do is we wait for the 15% move to the downside. Since we're entering now, or I mean, you probably can't do it now. Maybe in after hours you can, right? But I would wait to enter right now. And then if it goes down 15%, I put another 10%. So you'd be invested a total of 20%, right? And that's, of course, averaging down. And, of course, if it goes down like 30%, closer to the 83 cent level, I'll put another 10%. So I'll be totally invested in this market, 30% of my total position. So $300 out of $1,000. And I'll just wait, see what happens. Will the market turn around there? Maybe. Maybe it won't. But at least I'll be in a position where I haven't exhausted my entire position and just saying, oh, Napoleon said it's going to go up $140,000 right there. No, don't do that, guys. I can't tell you what to do, but that's not how I enter the market. I always scale into my position. This way, I never really have to average down my total. You know, like if I'm putting in $1,000 in the market, I'm like, boom, I put $1,000 in. Yeah, I thought it was going to go to the moon, man. Boom, I'm down 50%. Now you got $500. So now you got to scramble for more powder, right, to enter into the market, because you just enter your total position. When it just went down to $1.25, you're like, yeah, man, Zomedica is going to $5. Somebody told me that. All right, so that's how I would enter it, guys. 10% here, 15% down. I would enter another 10%, and then it gets down to 83%, another 10%. That would be 30%. I won't do anything else. At that moment, I would decide whether or not I would want to sell my position at a loss into the market. Like if it continues to like go down or something, right? Like 67%. At least at that moment, you still have more, capital to deploy in the market, or you can make a decision. Do you want to hold on to that position, or do you want to get rid of it? 30% of your total position, and then you're not taking a substantial loss. So out of 100% of your position, let's just say you lost 15% of your total position, if that makes sense. I'm sure that math is kind of off, as opposed to just entering $1,000 right here at $1.25, and then the market goes down 40% on you, and then you're walking away with like, $600 out of $1,000 because you're just putting your total position. So this is how, just one of the ways that I kind of scale myself in, you know, not get myself hurt out there in the market. So just hopefully that was helpful or useful. You guys have the levels. We got a little bit lengthy in this video. Hopefully it was useful. So thank you for your time. Leave an appropriate thumb just below the video there if you enjoy the content for the YouTube algorithm. Remember, the market is under a lower high, so it's just trying to seek financial support. Where will that level be? You have to pull up your charts and identify reversal candles. It appears to be this is a reversal candle, this green candle down here, April the 6th, 2021. So we just have to wait for the markets to make its next move. Okay, guys. Also, before you know, hopefully we've earned your subscription. Subscribe with us. Join us on this very interesting journey, and we'd send you out the alternative markets if you're into Bitcoin and altcoins. So that's it, guys. Take care of yourselves, protect your portfolios, execute your strategies. We're going to talk soon, and bye for now.